This is Eric Muathe, themother.com. After the close, February 17th, 2009. Today the Dow was down 3.79%, and the Nasdaq closed with a one-day drop of 4.15%. And I'm hoping, just like 2 weeks in a row, you had a chance to watch my video this last Friday evening, or sometime this long weekend, because today's move was not a surprise. Right now we are showing that the Nasdaq, and this is the Nasdaq 1 year daily, the Nasdaq 1 year daily is breaking this, what was a wedge. So we have day one of a break, and we'll see whether we get a follow through after this very obvious break, and I'm sure by now you're aware of that break if you've been following the charts. But more importantly is I see that the Nasdaq now shows a material break of this RSI support right here. That cannot be good for the general market. If we take a look at the S&P 500, this is I would say a 19-year monthly chart. So a 19-year monthly chart for the S&P 500, and what we are seeing now is we are now trading below 2002 monthly lows at 815.28. So 815.28 was a monthly closing low in September 2002, and we are now trading below that. So the market is already starting to break these lows that has been much talked about, whether we were going to hold support. I think, to me, the big question is, how do we get to Dow 6,000 or Dow 5,000? And are we going to do it in 2009? That's a big question, really, because it's the question that we are going to retest 2008 lows is really I mean, that's history. We are doing that right now. So the big question is, how do we get to much lower prices? And if we are going to be trading in the sub 6,000, sub 7,000 for many months in 2009, or do we actually have a miracle bounce and these lows from September 2002 hold? And that's really a significant question. I think the way the markets are trading, I would default to saying we are pretty much going to be seeing a Dow 6,000, Dow 5,000 this year at some point. If we take a look at the Dow Transport, this is a 2-year weekly chart, we are showing that we are still stuck in this very bearish, narrow price channel, and we are now trading at a multi-year weekly closing low if we close at around current levels. If we take a look at the TAN, which is one of the few markets who are really holding support, TAN is of course a solar ETF. Now they were really holding support right here, very strong support that was today broken. I mean, that's a huge break. And also, more significantly, is we are seeing the RSI has now lost its support, and that is a material breach of sentiment. So sentiment has definitely turned bearish, and even those probably who are thinking that this was a sector that might be finding support, they're probably losing hope, and you can see sentiment has been broken. One of the stocks that we were considering as a short last week was FSLR. First Solar was, and it did hold for most of the late last week action, but today it's given up its support, and we are seeing we saw a 7.5% correction today. So that's day one of this what was support. I would say my price target is around the 122, 113, 122. $113 area, which happens to be the 50% retracement and the 38.2% retracement from the lows in late November to the early January high. So that's my price target for this stock. And of course, more importantly, is that today we broke below the RSI support. That's a huge change in sentiment for First Solar. If we take a look at the Japanese market, as of Tuesday's close, their close is that we have now showing a break or a close. If we close below or around these current levels on the Japanese market. The monthly closing low going back 25 years plus, I mean going back almost 30 years actually, and beyond, is 78.31 was the monthly closing low in 03, and we seem to be breaking that support. So there's a lot of long-term trends being broken here. If you take a look at the Japanese market, the Nikkei 1 year daily, we have yet to break on a daily closing basis. 71.62 is a daily closing low last October. We have yet to test those lows, and we'll see whether this RSI support here is going to hold in the coming days. If we take a look at the French CAC, now their market, this is a 2-year weekly chart. This market already broke support, last year's weekly closing support. This market was trading a new weekly lows as of late January. So this market has already shown us that these world markets can break last year's lows, and right now we seem to be also backing off after hitting support on this weekly price channel here. We seem to be backing off to the downside. We'll see how the rest of the week trades, but it seems to me that this market already broke last year's lows, and we are probably going to be making new lows in the coming weeks. If we take a look at the Hang Seng, the Hong Kong market, is their markets are still holding this upward sloping price channel, which we broke in our trading today. But what is not inspiring in this chart is that we have a double top on the recent RSI action. This cannot be very bullish. If you take a look at gold, I have been absolutely wrong on this instrument. It still continues making new highs, and now I am showing, and I'm going to zoom in, the RSI is starting to break out. Now I need it to follow through, and we are going to have to change our thesis on this instrument and start finding ideas within this space. So I have been wrong on this instrument, and if this follow through is confirmed, especially on the RSI, then we are going to play those small cap gold stocks that I have been watching, and we'll see how that shakes out. What is confusing here is that the UUP, which tracks the dollar, is showing that it's about to have a monthly breakout with a former monthly closing high at 26.37. So we are trading a few pennies above that. So we see a potential breakout on a monthly basis on the dollar, which usually goes inverse with gold. So something has to give here, or they might actually rally together. Who knows? This is a UUP 1 year daily. UUP is showing that there is also very powerful RSI breakout. So this might be the beginning of a new leg. A rally either in gold and also the dollar together as safe haven, or one of them gives up the ghost and the dollar. To me, the dollar is more of a definitive breakout as opposed to the gold breakout. So I would default to saying the dollar breakout is more powerful, and the gold breakout is showing signs of having the same strength, but we need to see a follow through. I think that's the last chart on this. Oh, wait a minute. Before I go, I have one more chart. This is Goldman Sachs. Of course, we tried to short this last week. Final deep breakdown, and it's now trading down 11% today. And I did get a testimonial today. You know who you are. Making money, going Goldman Sachs short around 98. I would say start taking profits. But what is really tricky for Goldman Sachs, if you own it, is that this close here just above 50 is very tricky, because if it moves below 50 and closes below 50 tomorrow, Wednesday, or sometime this week, it's going to be another huge down day for GS. This is Eric Mother.com. I'm going to have another video for subscribers before they open tomorrow with stock ideas, and a follow through on some of the charts I did not mention, including SRS and SKF, I think. So we'll see what shakes out. We are making money in this market, but start taking profits whenever you see a big move on your holdings. Peace and blessings to you.